Well, markets are hovering near record highs this month, despite growing concerns about the coronavirus. And our next expert thinks that this bull market is here to stay. Joining us now is Ghabour, co-founder of Key Advisors Group and author of Common Sense Bull. Eddie, we see the downward movement in the markets today, the Dow off 200 points. When you see these types of bullbacks, is that a good reason to buy or a great opportunity to buy?
Today's pullback isn't deep enough. Frankly, 200-point drop today isn't what a 200-point drop was a few years ago. So I do think that we're probably short term. We're a little bit overheated. And I would look at days like today as buying opportunities for those investors that have not participated or believed in this bull market. Because frankly, when you look at the fundamentals of how low interest rates are, we have an accommodative Fed. And with this coronavirus now, the one dynamic that I don't think people are thinking about enough is U.S. stocks are looked at as a safe haven now, in my opinion, as best of breed around the globe. And that's going to attract demand here domestically as well, too. So although you'll have some companies announce revenue hits because of the coronavirus, like Apple announced last night, or this morning, I should say, that's going to be short-lived, in my opinion. And I think that'll be a buying opportunity when you see these types of pullbacks.
So, Eddie, you think these types of pullbacks are buying opportunities? You're bullish here just in terms of the market's momentum. What do you think the catalyst will be for the market to continue this upward trajectory?
So really the catalyst is when you're going to take a look at the end of the day, until we have a recession, this bull market's not going to end. And we are not going to have a recession in 2020, in my opinion. Our consumer is just too strong. We would have to see something drastic happen economically here to derail our run in 2020. Couple that again with the fact that, look, whether we like it or agree with it or disagree with it, the fact of the matter is the Fed is going to be here for liquidity, to keep rates. I would not be surprised if they actually cut rates this year.
Eddie, let me get your thoughts on earnings season so far. So as it stands right now, more than 85% of the S&P 500 market cap has reported fourth quarter earnings. 64% of those companies have exceeded their bottom line expectations. This is all according to the latest numbers from Credit Suisse. When we take a look at where earnings stand right now, it was expected to be a lackluster quarter. Do you think the strong performance that we've seen so far is enough to keep this momentum going? It sounds like you think so.
I really do think that. And look, think about how many now for the last year, we've been hearing a lot of negative talk in regards to a recession is coming, and it's not materialized. And until the fundamentals change, I'm not going to change my stance in regard to how bullish we're going to be this year. I do think the path getting there is going to be much choppier than it was last year, but this volatility is good. And frankly, the negativity and the doubt that people have continued to have in this bull market is another reason why I'm a believer. We have not had that euphoric state yet that you normally will see when you hit a market top.
Eddie, you say that the market's going to continue this upward momentum. You would use some of these pullbacks as a buying opportunity. What are you buying in this type of environment?
So I think it's going to be frankly, a lot of repeat of last year. I think technology, in my opinion, is going to continue to lead the way for growth because there's still good growth opportunity there. I think housing sector is an interesting play. We have a shortage of housing right now, and I think that bodes well for the economy, and it also could bode well for different types of housing stocks. And then last year, at the beginning of the year, I did like the banks. They had a good year last year, and I still think the banks will have a good second half this year once we get some of these coronavirus fears away, because that has driven down the 10-year note and flattened the yield curve. But I think that yield curve will steepen as we have a strong second half once again, once this virus risk is behind us.
All right, Eddie Ghabour, thanks for joining me.
Thank you for having me today.